All right, so the case of a sustainable low, not a bottom, continues. Today's catalyst was the Federal Reserve's chair, Jerome Powell, and Jerome Powell worked it out. He breathed fresh life into market breadth. So let's take a look really quickly at the market today. So here is MFI in TradingView.com. I call it AT50 for above the 50-day moving average. You can see now market breadth is steadily expanding. I made the case for this possibility earlier in videos and blogs. So 3 of the last 4 days, market breadth has definitively expanded. Now it's reached a critical point because it needs to break this dotted line downtrend. MMTH, or what I call AT200, also is expanding. This is the percentage of stocks trading above their 200-day moving averages, and it too is facing its first strong test with this 20-day declining 20-day moving average. Now, before I jump into the indices, I want to look at Swing Trade Bot. I am a subscriber, and just look at some quick trends. Look at this. Consistent with expanding market breadth, we have the short-term trend has turned up. If you recall in my previous video, the short-term trend, I believe, was down, a mixture of down and flat. Now it's flipped up. So this is another positive development. Now, because of this, I decided to check out this scan. Actually, I went up to the menu to find the scan, but I can just click it here. Given expanded market breadth, I like stocks that are particularly looking strong, going above their 200-day moving averages, which is the long-term indicator of health. I won't take you through this now because it'll take too long, but I was actually surprised that I didn't find that many um, good stock charts with my limit. So I put a limit of 10 as the stock price, 200,000 as the minimum average volume. Excuse me, I'm working a little bit of a cold here. Oh, right. And get rid of ETFs. I only want stocks. And I only came up with 3 pages. And yeah, 3 pages and just a few stock candidates. And I'll go over those in a second here after I go through the indices. So let's take a look. Again, the point here is to find stocks that look particularly attractive for short-term trades, because presumably once they get above the 200-day moving average, their downtrends are coming to an end, and or their individual bear markets are coming to an end. All right, so let's look at the indices, S&P 500. Oh, right. Let's take a look first at the 15-minute chart. Look at this. This reaction to the Fed's statement today will define some critical areas of support right here and critical areas of resistance going forward for the next few days, maybe even weeks, if the market just spins its wheels and goes nowhere. So just keep this in mind. The low here right before buyers celebrated the Fed's release of the statement was around 56.33, and then resistance was hit at the high of the week, just above the high of the week at let's just call it 57.15. All right, so that's a tight range, but I think it's going to be important to keep an eye on those numbers. All right, let's look at the daily. The daily will be kind of covered up by my 15-day charts there. So let's get rid of a few of them so you can see this more clearly. And you can see that there's this parallel rally that we had on Monday where the highs of the day were practically the same and the opens are practically the same. And I earlier pointed out this up, down, up, down, up, down pattern as the S&P 500 went down. Maybe there's going to be an up, down, up pattern as this steadily creeps towards 200-day moving average resistance. I fully expect if it's not this week, it'll be next week that the S&P 500 tests this important resistance level. All right, let's look at the NASDAQ. Oh, by the way, as full disclosure, I own SPY shares in the long-term portfolio. And again, do not treat anything that I say here as a prediction or a recommendation, but for entertainment and educational value. All right, this is the NASDAQ. You see a familiar pattern. The open was much lower than Monday, but still the highs of the day were relatively the same as Monday. And you can see the NASDAQ has largely has this churning patterns. I'm actually kind of surprised that the swing trade bot considered this now flipping to an uptrend. But oh wait, did it? Let's see. Sorry, let me go take a look. No, it is flat. Okay, good. It's consistent. So you can see the NASDAQ is lagging because its trend is still flat. Unlike IWM, which I happened to come into this day with a long a call option, and I sold it right ahead of the Fed meeting because I didn't want to take the chance that all of these gains would be faded. And unlike the other indices, IWM actually closed at a high for the week, which is cool. Because it's been such a laggard, it's deep in its bear market, it's facing looming converging resistance here. So it has a lot of potential upside until it gets to that resistance. So above this 20-day moving average, I'm gonna I have no problem chasing IWM and this bear market line, which is the official bear market line, 20% below the all-time high, is becoming more and more of a distant memory. All right, let's look at the VIX. The VIX is no longer elevated. 20, the level of 20 is considered elevated. It closed right below that. So now we've got this steep decline, which is also confirming expanded market breadth and the market coming to peace. And the Fed, of course, has helped this pattern along today. All right, let's look at some of the stocks that I found. So, for instance, Itron, which is has infrastructure and support for smart cities and stuff like that, caught my eye on the 200-day moving average scan on Swing Trade Bot, and I really like this chart. I put it on my buy list because it had a positive earnings reaction, and it hasn't retraced that and looks ready to resume the uptrend or the up reaction. So I really love this setup. It's above all the important moving day averages, the 20-day moving average, 50-day moving average, 200-day moving average, which also means I get a very clear stop loss if the stock doesn't perform as expected. I can stop out right here at around 101.60 or 75. So that's a very well-defined trade. I really like that one. Another stock that I found on the oh well, actually it had earnings. Let's go to William Sonoma. Here you go. Oh no. William Sonoma is WSM. And it reported earnings and it struggled and it had a wide range today. I mean, it was at its low at 149 and it closed at 166. That's a huge range. Um, Normally, closing above the 200-day moving average after earnings would be positive, but I really don't like this long range, huge selling volume. And now this gap here is just begging to be officially closed. This is from the post earnings on November. So I actually have put Williams Sonoma on my short list if it goes below the 200-day moving average again. If it doesn't, if it continues higher, closes higher, then that confirms the 200-day moving average breakout, and it's presumably safe for now. Okay. Oh, right. FICO. FICO was a interesting one. This also came up on the scan for 200-day moving average breakout. And this is why a video is good because I need to show multiple time frames here. So again, like Itron, um, well, actually not like Itron because Fair Isaac, which as you may know provides credit scores, has just kind of churned along since earnings. But that's still constructive because once it breaks out above this range, it has a long way to go back to all-time highs. This long slide precluded the current market sell-off, but it also is very natural because if I go back some, you can see, wow, what an amazing breakout this was, right? If only I had been paying attention to Fair Isaac Corporation back in, what is this, 2022, so 2.5 years ago, and it has just barreled its way higher. And you can see that when it gets too far away from its 200-day moving average, like here, a correction occurs. And then buyers just got really excited, and earnings created a sort of a blow off top type action, and it came right back to 200-day moving average. But overall, if you look at this time frame, this 200-day moving average is something to buy. So I definitely put FICO on my buy list. I just want to see the stock move higher from today's close. Okay, and I believe there was one other stock that I did not like that I put on the list. Let's see if I can find it for you all. Oh, right, IGV. How could I forget? So this is the ETF for software stocks. It includes the likes of CRM, sorry, Salesforce.com, Adobe, and so on. And while it has the same pattern that I showed in the S&P 500 and the actually it's the S&P 500, with the mirror trading, its fade from from the intraday high is much more ominous because that represents two failures at 200-day moving average resistance. So IGV needs to hurry up and get above this before I get really wary and put this on my short list. And I would only short it, of course, if it got, say, below this low here, just as a confirmation of failing at 200-day moving average resistance. And you can see in my charts, just as a general comment, I haven't seen a lot of charts with these double top type actions and across a lot of sectors. So this is, when we finally get a rally going, a really sustained rally going, even if it's a bear market, sorry, not a bear market rally, but temporary rally, this double top is going to loom large on a lot of stocks and a lot of indices. So keep an eye on that in the coming weeks and months. Again, if we get some sort of sustained rally and the market forgets about all of the chaos and economic uncertainty and fears of slowing growth and tariffs going on and off. I mean, eventually the market will forget about these things. For those of you who have been in the markets for a while, eventually the market gets tired of being afraid and it just starts to pretend those things don't exist and starts looking ahead to the brighter future. But having said that, keep an eye on these double tops. Okay, so that's all for today. Put any comments or questions down below. Subscribe to the channel if you want more, and click on that bell so you can get alerted when I post new videos and shorts for the stock market. If you want more details, you can always go to my blog at drdaru.com/122, all letters. Thank you for checking me out, and I will see you the next time. Take it easy.